Sydney booms and Melbourne falters in auction markets over the past week. Facebook set to drop its news function in coming days, and one of the world's biggest telcos gets hacked. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 1st of April 2024. I'm Michael Thompson, and welcome back, Sean Aylmer.
Thank you, Michael. I'm delighted to be back. Had a fantastic week off in Bali. Big shout out to Lux Escapes. I actually booked via Lux Escapes, and the service level, obviously where we stayed, was fantastic. But even before we went, from Lux Escapes, so big shout out to them.
That's Sean. I've got to just quickly point out the elephant in the room, the white elephant in the room. You're the only person that can spend a week in Bali and come back without a tan.
Oh, well, don't be like that. You know, this is a tan. Yeah. What you're looking at is about as brown as I ever get.
Yeah. Look, I'm not one to judge because I have a very healthy respect for the sun. So I don't go outside without an inch of sunscreen on. So I actually appreciate this, kind of seeing you right now. But anyway, it's like you were never gone at all.
It feels a little that way. No, it doesn't feel that way. We had a great time, and I'm determined not to suffer the consequences of spending too much time in the sun, Michael, which of course begs the question, why Bali? But let's just move on.
Yeah, let's move on then. And you've got an interview coming up today. I really, really enjoyed this interview. You're speaking with Jacob Kakanis from Jarden.
Yes, we're talking about Qantas, and we don't often focus on one specific stock on Fear and Greed, but this time we did, and we looked at the pros and cons of investing in Qantas, how it's performing, post Alan Joyce with Vanessa Hudson, the new CEO. It's just a fascinating chat, and it's great to actually deep dive into a company as iconic as Qantas.
Yeah, it's a really interesting, very worthwhile conversation. Of course, we're not an investing podcast. You should seek professional advice before making investment decisions, but it is really interesting hearing what Jacob has to say because it's a company that he knows so well. So stick around for that one. It is an abbreviated show this morning, a little bit shorter with the country celebrating Easter Monday. Full episode will be back tomorrow morning. Of course, though, it is still a Monday, so we still have a chat with Stephen Koukoulas, our resident economist for Fear and Greed the week ahead, straight after the interview. So check that one out too. But on with the show, Sean, it might have been the Easter holiday weekend, but that didn't really stop the property market with nearly 900 homes going under the hammer.
That's right. It's well below the previous weekend, of course, which was a record weekend, but still pretty good for this time of the year. The preliminary clearance rate came in at 71.1% across the 5 capital cities, staying above that 70% mark. It would have been better, but for Melbourne, where the clearance rate was a very, very soft 63%. Now, that's the lowest level since November last year. That was after the Melbourne Cup Day rate hike. According to CoreLogic, no surprises back then that Melbourne was so weak. Not so sure what's happening over the past 7 days or so. By contrast, Sydney's preliminary clearance rate was almost 78%, actually higher than a week earlier. The other capital cities were a touch weaker than normal, and with around 2,000 homes scheduled for auction over the next week, that's across the whole country, it'll be very interesting to see if Sydney stays strong and Melbourne stays weak. It certainly has been the trend so far in 2024.
And Sean, it seems a long time ago now, many, many days ago, but the local market hit a new high on Thursday at its close.
It did, with the S&P ASX 200 closing up 1% to 7,897 points. That was, of course, was on Thursday. The miners led the way, but the real estate and telco stocks did well also. It's somewhat ironic that the material sector, which include the big miners like BHP, Fortescue Metals and Rio Tinto, somewhat ironic that the material sector led the way late last week, given the sector is easily the worst performer so far in 2024, down nearly 8%. In fact, Michael, I thought tomorrow we might just have a bit of a closer look at the best and worst performers for the March quarter because it tells a very interesting story.
Yeah, that sounds great. And just checking international markets, thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. Sean, what happened over the weekend?
Well, US Federal Reserve Chair Jerome Powell said the world's most important central bank isn't in any rush to cut rates, and he wants to see more evidence that inflation is contained. Not long afterwards, figures show that the US prices increased less than expected in February, with the cost of services, all important, Services outside housing and energy slowing significantly. That very much keeps the June interest rate cut on the table. The Commerce Department report also shows consumer spending rising by the most in just over a year, underscoring the economy's resilience. There was also good news out of China, with a measure of the manufacturing industry critical to Australian exports rising for the first time in 6 months. The official Manufacturing Purchasing Managers Index suggests the world's second largest economy might be stabilising. That would be good news. In terms of the numbers, Brent crude is trading around $87 a barrel. Gold strong at $22.33 an ounce, and iron ore is staying above the $100 a tonne level. Just in currency markets, Bitcoin's trading above $70,000 a unit, and the Aussie dollar is buying just over 65 US cents.
You'll be pleased to know, Sean, that not too much happened with the Aussie dollar while you were
right?
gone. Did you know that last week, I think pretty much every day, it was 65.3 US cents? It was alarmingly consistent.
I actually have a lot of bills in US dollars that I have to pay in US dollars. So, as you know, I have a son studying over there, and it is just horrendous because 65, oh my God, the amount of money I'd have if it was 80 cents or something like that. Anyway, personal gripe, no need for that.
Oh, you've been back for 6 minutes and you've already managed to squeeze a personal gripe into the show. All right, we'll be back in a moment with the rest of the day's business news. Sean, global fund manager Vanguard has found itself in hot water in Australia, with the federal court finding it misled investors about its $1 billion ethical bond fund.
Very significant. The federal court found on Thursday that Vanguard failed to adequately screen out certain investments against ESG criteria, such as holdings in Chevron, that's a big oil company, and also in oil pipelines, despite promising investors it had done so. It's a corporate watchdog's first greenwashing court victory, and Vanguard may find itself paying millions of dollars in damages, according to a report in the Financial Review. Justice Michael O'Brien also slammed a portion of the regulator's case as having logical flaws and an unhelpful blurring of legal concepts, in a minor win for Vanguard, but overall it really was ASIC that came out on top. The case is the second of several greenwashing cases brought by the Australian Securities and Investments Commission. In short, the fund promised to not invest in bond issuers with significant business activities in a range of industries, but in reality, it invested in activities linked to oil and gas exploration. Not very ESG friendly.
No, certainly not. Now, I mentioned this one at the top of the show, Sean. The Facebook News tab will disappear this week as part of owner Meta's plans to drop news, which is a decision that will cost local media outlets $70 million.
Given about 40% of Australians say they use social media to find news, and Facebook's still the most used social media platform in the country, then it looks like a bunch of people will soon be either ignorant of what's happening or maybe have to look or listen elsewhere. I have an idea. Something's just popped into my mind. I know where those people can go.
Oh, what a coincidence, Sean.
As it turns out.
Welcome to Fear and Greed.
That's right, the Meta edition. Anyway, look, Meta's decision has put the company in conflict with the Australian government and regulators. They're considering whether they can force the company back to the bargaining table. Meta's already closed news sections in the United Kingdom, France, and Germany. It's in the process of doing so in the United States. Meta says the news experience has become only a small part of the Facebook experience for the vast majority of people. People prefer to watch videos, reels, and things like that, apparently. There you go.
Yeah, and interestingly, and again, self-promotion here, Sean, that if you do like to get a little bit of daily business news via reels, via video on social media, follow Fear and Greed on TikTok or follow Fear and Greed on Instagram, and we post a daily video featuring a news story, business news story, and we've only been doing it for, a month or so, and it's been, I would say, frighteningly successful.
It is incredible how something that all we do is really give a news story of the day every day, just how many people are interested in watching it. And I say watching it because that's what it's about.
Yeah, indeed. And just catching up on some major news from late last week, which landed after most of us had shut up shop for the weekend. China has dropped its wine tariffs on Australian plonk.
Yep. Late Thursday night, the Chinese Ministry of Commerce said the tariffs would be dropped from Friday, having been imposed in late 2020, decimating the $1.2 billion export markets for hundreds of local wineries. This was the last major tariff on Aussie goods, though there remains protectionist policies on some beef and on Australian lobster imports, though they are relatively minor compared to some of these other products. The local ASX-listed company to benefit most from the decision is Treasury Wine Estates. Its share price has been running ever since the dropping of the tariffs was mooted. It's up nearly 25% since early January.
Okay, turning to international news now, and one of the world's largest telcos, AT&T in the US, said that personal data from about 7.6 million current account holders and 65.4 million former customers was leaked onto the dark web.
The data leaked about 2 weeks ago includes personal information such as social security numbers and appears to be from 2019 or earlier, the company said over the weekend. The source of the data is still being investigated. According to AT&T, it's not known whether it came from the company or from a third-party vendor. The company spent the weekend resetting passwords, quite a job when you're talking about 8 million current account holders, let alone the 65 million previous account holders. AT&T is the third largest US retail wireless carrier. Verizon and T-Mobile are bigger, but one of the biggest hacks I think that we've seen ever.
Yeah, when you're kind of listening to the details of that story and you think, okay, 7.6 million current account holders, that's big. That's big. And then you get to 65.4 million former customers. That's what more than double the entire population of Australia.
Yeah.
The equivalent of having their data leaked. That's extraordinary.
Yeah, sure is.
Yeah, and finally, Sean, it isn't only the local bank stocks doing well. European bank shares have hit a 6-year high after lenders promised record shareholder returns and profits surged thanks to rising interest rates.
That's right, Michael. The Stocks Europe 600 Banks Index reached its highest level in 6 years late last week and is up 34% over the past year, according to the Financial Times. The continent's banks are outperforming US rivals for the first time in more than a decade. That's in terms of return on equity. The stock's high coincides with strong fourth quarter results from UniCredit, Santander, which is a big Spanish bank, and Lloyds Banking Group, of course, out of the UK. Shares in UBS, which last year took over its collapsed rival Credit Suisse, have done particularly well, jumping 46% over the 12 months to their highest level since March 2008. Some of the Italian banks are also hitting multi-year highs. So very good news for the financial services sector in Europe.
Yeah, certainly is. Now, up next is the Fear and Greed Daily Interview. Your guest today is Jacob Kourkanis from Jarden.
Yes, all about Qantas. He is the airline analyst at Jarden. As I said at the top of the show, we don't often go sort of deep dive into one specific stock, but Qantas is such an iconic brand. Everyone knows it. It's also been through a hell of a lot of turbulence. And we talked to Jacob about that.
Oh, you just couldn't resist, could you?
I couldn't. I tried to stop myself, but couldn't.
Yeah, you should be ashamed of yourself. You know, actually, Sean, I just realised something as we were doing this. You know what today is? It's April Fool's Day.
April Fool's Day, Michael. Yes.
I don't know whether it's because it's Easter Monday. It's kind of crept up on me. But I feel like I am not kind of alert
adequately
to this.
Prepared?
No, I know. And one of my favourite things to do, and I've got to go and do this now, is kind of go back through the papers and look for, remember the good old days when kind of companies would put joke ads and things in there?
Yes.
I mean, the good old days were only a few years ago. It seems to have stopped now, but maybe I'll be able to find something today.
Maybe Elon Musk will have the ultimate April Fool's Day joke.
Yeah, he's turning X back into Twitter or something.
Or, yes, expected. Or Donald Trump, maybe. He's not going to run for president.
Oh, goodness me. I mean, each of those things, they're too big. They're too, you need something that's really not going to kind of offend people if it actually does take off. But I hope, my goal is I would love to see businesses have a bit of fun again, but also money's too tight to waste on kind of April Fool's Day ads now, aren't they?
Don't know. Might be good branding or something or other.
Yeah. Anyway, look, we digress because we've actually finished the show. So have a listen to Jacob Kourkanos. He's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, where you will also find Fear and Greed the week ahead with our resident economist, Stephen Kourkoulas. Thank you, Sean.
Thank you, Michael.
It's Monday, the 1st of April, 2024. Make sure you're following the podcast and join us online, as we mentioned, on Instagram, X, LinkedIn, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.